Hello, today is Thursday. It is the 19th day of June 2014. My name is Derek and welcome to today's gold and silver chart analysis, starting with silver. Very interesting and noteworthy day. There's a lot of information to go over within this video. So let's get started as the white metal today gaining about 4 1/3%, almost $1, with volatility at 5.5%. The volatility is the largest of the year, going back to December 31st of last year. The up day, of course, took one day to go from the first Fibonacci level to the second one. And on Tuesday, I was mentioning this day here. I thought it was very interesting that it bottomed this retracement at 1950 rather than that of around 1938, because the Fibonacci from here to here stayed at 38.2%, was that of 38. Was that some sort of force stating, okay, buyers coming in earlier, sellers leaving earlier because something brewing? I don't know, but it obviously did result in higher gains. The bullish action yesterday was really pointing to a higher increase of breaking it. That's why I said in the video log yesterday my bias was for a break above 20. Of course, I wasn't going to state, yeah, it's going to go all the way up to 21 or close to it. I knew it was possible, but my first level was 20 1/4. That's why I stated yesterday 20 1/4, and it blasted through that. Now, overall, when I get to key Fibonacci points, I have a now what way of stating things. So you come here and you're like, okay, now what? What's going to happen? We're at Fibonacci. We haven't been there since early May. Now what? Well, it's going to be resistance, and if so, light or heavy? Well, the answer was yes, it was resistance, and it was light. Yesterday, we come back to this band. Now what? Or the Fibonacci level we come to. Well, the odds are increased that we take it out, and then you start to see it. So as it's coming higher, 2010, 2011, you got to say to yourself, okay, so now 2025 area looks like it's going to come into play. Question is, will this level find support, or are we going to have a fast move to here? Didn't test support, did have a fast move to this level. Now what? Number one, resistance. It's pierced a little bit above it, and it could pierce even more above it. For this to be resistance, you need a few days for it to settle, or it has to go below it, and it has to do it relatively fast by next week. That's one possibility. Number two, will this be support rather than resistance? Short term, it already has. It went to this point, and it's now at here, right at significant Fibonacci retracement. And then will it be a fast move to the next level? Well, Friday and Monday would be an indication towards that. If, of course, it's coming into play, it did manage to reach this upper band, which is hard to hit. It's harder than a Bollinger Band, and it's in at 2070. So it's one of the rare opportunities where price action's currently above this this formula that I made for it. And when I see that, it means things can get pretty wild. That you could normally, oftentimes, you're going to get a pullback or correcting through time. But if you have continued momentum to the upside, it's not that large of a surprise now to have these big gains to continue forward. 3%, 4, 5, 6, 7% up days, definitely down days as well, but it's a possibility that increases because of the market momentum at that time. Now, as far as key support level, yeah, you got this band. It's a long, long, long ways away. But overall, what I need to see happen is resistance established. Right now, it's been established here. Come back to the band and then break whatever the established resistance happens to be. This thing can keep going up for a while before it hits it, although unlikely to be the case. Let's adjust the Fibonacci retracement from this low to this high now, and we'll do that. And that gives us two key lines here. I got 61.8 and 76.4% on the line. From here to here, the distance is 76.4%. From here to here, the distance is 23.6%, which is the first retracement I'd be looking for after a significant gain. That mark is in at 2036, and then a more bigger level, a 38.2% correction, is in at basically 20 even. And if price action, of course, breaks what our current high is, which is 2093, these levels, of course, these lines will start to rise within it. This is the third time that I've seen these types of bullish moves in the silver market, with the last time being here, off of a bull or bear market, trying to establish a multi-month bull market. And I said the same thing here. Establish resistance, come back to the band, break resistance afterwards. After going to the band, it did not break resistance. And of course, the ultimate fast move that came after it. The time before then, well, that was last summer. And there's a move to the band and didn't come back to break or try to test resistance. And then a little bit of a fast move towards the downside there as well. So that's one of those things. Do you believe this rally? Do you trust it? Because to me, with the significance of this move, one of two things has practically definitely going to happen. The first, another failed breakout. And this could be deadly, which means it's got some point, it's going to have your harsh sell-offs, it's going to meet up within the band. It's either going to test or not test this level, but if it tests it, not beat it. And then ultimately break below the band, and you'd expect at least a test of the previous low, but most likely even breaking it out. Of course, that's one of the possibilities. The next one is a multi-month bull market. Again, like I say, we've had two opportunities before for it to occur. At some point, it is going to play. This market has been overdue for a rally for months and months, and will be until it actually has it. And when we take a look at this on a more longer term time frame, I'm going to look at this on an 11-day chart, which means each period represents 11 days, over 1,000 days in total. It's a long ways to go, still down 58% from its previous high of 2011. And I'm using an 11-day chart because I got a comment yesterday stating why I only use an 18 average, and it really doesn't matter if I use an 18 or a 20 really, but that many periods for this many ticks, which is 100, seems to be working ideal. And with the 18 average highs and lows, it's been working for me so well, there's no way that I would even consider changing unless I can see something better. Anyway, with that being said, a multi-month bull market means that this thing would start to reverse into higher highs and higher lows. Large up move occurred in the year 2010 and early 2011, which seen the price action go from lower than where we were at now, all the way up to 50 with no real corrections actually, because the first correction occurred after the top. And after this move, if you're looking for a second leg higher, and you're trying to chase here, well, wait for it to come back to the band, then break established resistance for that of a possible second leg higher. Well, it came back to the band, barely went higher, didn't test the previous high, and of course, down she went. This average is now declining. Therefore, for me to see this turn into a bear market, I need to see resistance established within the band, which occurred here, and then break established support. We'll tested it again, correcting within it, and test it again. Got above it, so now you could start talking about a possible reversal on break of resistance. That didn't happen, but then when it broke below here, you have another test, and there's really the only leg lower that has occurred within in a bear market, of course, because this leg lower was in a bull market, this leg lower was in a cautiously bull market, and all of these leg lowers were in a neutral market, so this is within a bear market. And now it's been holding on to this band for quite some time. This is a third test of the band. And you state, okay, just like here, you don't want to chase it, you want to come back to the band and break resistance. So let's do the polar opposite now. You're looking at a negative level, it's going down, and it's down so much, you don't want to chase a short position at this point. Maybe you don't want to sell because it's down so much. Rather, let's see it correct the band and then break established support. Okay. So it does that, comes back, but doesn't break support. Test number 2, breaking down again, and then again. But you can say it might be the same as this, just need a few more tests, it's going to break lower, and it might. But for me to see this turn into a bull market, first step is for this thing to flatten out, which is pretty much at that doing that stage now, especially with today's gain. If we can hold the next 4 to 6 weeks, stay at above 19.5 or so, it'll flatten out. If it can break above the 18 average of highs and stay there for a little bit, then, or go really high up to, say, 23, then this thing will start to rise. Resistance has already been established at 2 key levels already. What is really this? 24 and then 26. 24, of course, was resistance here and resistance here. And if it does go to 24, you start to notice the band going higher. So ideally, the best thing on a bull market is for this to go to either 24 or 26, which would make the band start to rise. Then ideally, again, doesn't mean it will, come back to the band, and then on a break of resistance, that's when you can say that the bear market is over and we could possibly look forward to a bull market. It really has to get above 34, even 36 for me to state that it's in a long-term bull market at this stage. And that will be it for the silver analysis. I do have a gold chart as well. And what I'm going to be showing is a 3-day chart spanning a little over a year. This is the second day of the 3-day for the current time frame, but yesterday's day didn't do so much. It gained about 0.5+%, which means the majority of the gains, of course, are for today. 3 2/3% the last 2 days. Fibonacci analysis will be from this low and this high. It's mainly been, of course, in the sideways action. Anything below here is bearish, bullish, and neutral. So this market is neutral on this time frame, trying to become that of a bullish level. Whenever you have a situation where you make a big low and big high, you say, okay, what are we going to take out next, the high or the low? Because this low is higher than here, and this high is lower than in here. But why I say that is when you finally find which one you're going to break from, then you can have a better indication for further gains or losses. After all, if you break past this resistance of the low 1400s, you'll be talking about moving into the 1500s. And you break support at around 1200, then you'll be talking about going to 1000 or 1100. Of course, on a tangible level, there's a lot of long-term reason to believe that the markets are going to be going higher, which is why I personally bought silver, noting that if it does break down below, it's probably just going to be just another leg lower in the bear market that's going to eventually turn into a very significant bull market. That's how I'm playing it, and yeah, that's that. So now that we have this move, I'd fully expect this on the short term now for it to make it to this 1331 level. Ideally, a small pullback to what with this previous resistance, 1300, and then make a move, break towards this previous high, and then maybe come back down to this band and then break higher. That would be the most ideal thing that could happen, but the market's going to do what the market's going to do. Overall, it's really just one simple thing for me, and that is, wrong chart. It is that it's going to either be the start of a bull market or that failed move. Take care.